Hi, my name is Jordan Brooks, Director of Market Analytics for ALN Apartment Data. And in this episode of Takeaways, we're going to be discussing the latest ALN newsletter titled Multifamily Rent Growth Accelerates. And I wanted to spend a little time as we jump in here, just going into a little bit more depth on sort of the various rent trends that are occurring right now, because, a big part of evaluating rent performance is what time period you're using. And there's been some attention lately on the fact that according to some metrics, rent growth is actually decelerating. So I wanted to kind of unpack this a little bit, and we try to keep these newsletters a readable length, and so I didn't really have the space to go as much in depth here. So on a year-to-date basis, so January through May, when this newsletter was written, rent growth is higher than last year. So average effective rent growth through May of this year was 1.7%. Last year through that same period was 1.2%. So that's where we get the rent growth accelerates part of our title this month. However, year over year for May, the last 12 months, average effective rent growth is down 3.3% gain in the last 12 months relative to a 4% gain in the previous 12 months. Okay, so that's where the deceleration is coming. And then there's also been some talk about the monthly data where, some of the monthly rent growth was higher in the first quarter than it has been so far in the second quarter. And so I just wanted to make a couple of points there. For one, the fact that the year-to-date rent growth number is higher than last year is encouraging, and I would say gives a little more weight than the year-over-year number slowing down, simply because the slowdown in the year-over-year rent growth is due to 2024, the second half of 2024. And what was happening in the second half of 2024, you had seasonal trends where, we generally capture most of our rent growth sort of late spring through the summer, and then rent growth cools off in the fall and the winter. So you had seasonal trends cooling rent growth in the back half of last year. You also had the very active new construction pipeline of the last few years peaking in 2024. And so you had a flood of new units coming online that was swamping absorption at a time when seasonally rent growth is slowing down for the majority of those 6 months in the back half of the year, right? So generally, again, at least the fourth quarter, but also September, we generally see a slowdown in rent growth. So you had some factors sort of coming together that made a slowdown in rent growth in the back half of last year fairly predictable. And then it's re-accelerated this year, which is the encouraging part for sort of looking ahead on multifamily rent growth pictures. So again, you have to decide which one you're going to weight more, the year-to-date number, the year-over-year number, the monthly data. The monthly data also has been unusually volatile this year. So that's the case with absorption as well as with rent growth. In general, though, March so far represents the peak this year in rent growth. A little bit of a slowdown in April, but then it picked up again in May. So not all that concerning really in the monthly data. Most years we don't see a perfectly clean uptrend from January through the summer. There tends to be a little bit of bouncing around, and this year that's been the case maybe more than usual. But again, nonetheless, the softness in rent performance in the last 12 months actually occurred in 2024. 2025 has been pretty robust. Now, also the newsletter went into some regional differences. We also discussed price class differences and then some drivers of the rent performance. So again, be sure to check out the newsletter itself for some of those additional sort of context points. But I also wanted to spend just a minute looking at the top markets for 2025 year-to-date rent growth. So I'm just going to read these off because there are some unusual markets here at the top of the list. Again, this is through 5 months of 2025. So Richmond, Virginia, Buffalo, Syracuse, New York, Kansas City, Chicago, Grand Rapids, Milwaukee, Detroit, Columbus, Ohio, St. Louis, Cincinnati, Dayton. So the point was made in the newsletter that regionally we're still seeing the Midwest and the Great Lakes regions lead in rent growth, and that has a lot to do with relatively lower new supply pressure compared to other parts of the country. That's kept occupancies higher and allowed rent growth to overperform. These top 10 markets, by the way, the average occupancy is almost 300 basis points higher for these markets as a group than the national average, again, just sort of to that point. But I wanted to read those markets off because, again, a lot of those markets are not markets that we would generally expect to see leading the nation in rent growth. Again, Detroit in particular, Richmond, Virginia, Columbus, Ohio. I mean, these are markets that in some years do pretty well, but generally are not going to be at the top of the rent growth list. Chicago would be another one. So again, really just wanted to drive the point home that when we look at rent growth right now, for the most part, we're looking at markets where the last few years have not brought a deluge of new supply, and the demand in these markets is a little bit inconsistent. Some of these markets have strong demand, and that's helping to drive rent growth. Other markets, the demand is kind of lackluster, but because of the lack of new supply, occupancy is high enough to still garner the rent growth. So that's your top 10 leaders. I also want to just point out that the latest blog post on ALN's website goes into a little bit more detail on both year-to-date rent growth leaders as well as some year-over-year data to kind of give you both pictures there. But that's it for this month's newsletter. In terms of upcoming events for me, this is sort of the summer doldrums period, so nothing on the calendar until August. So I'll check back in with you next month for some upcoming events. And I just also want to mention too, in addition to looking at the ALN blog for additional content that we'll be putting up during the summer slowdown a little bit, be sure to check out ALNdata.com on your social media platform of choice for content that we put up there. But also, I recently did a market update webinar, and that is posted in full on ALN's blog, again, ALNdata.com/blog. So if you're interested in more of a deep dive in recent multifamily performance and expectations for the rest of this year, be sure to check that out. And I'll see you next month.